Good morning, Steve Free in Chicago with the morning grain comments. Well, to start out overnight, we didn't trade yesterday, and the calls early were a little bit lower, thinking that number one, South America, Argentina weather was changing to the better, and then number two is that some of the managed funds were concerned that this week when the USDA has their outlook conference, they're not going to put out 2022, 23 U.S. S&Ds that are necessarily going to be bullish. But then we had sharp rallies after the president of Russia came out and annexed two Ukraine states as independent. He also mentioned that troops were going to go in, peace type troops, to go in and protect those states from Ukraine. A lot of misinformation floating around. The Russian people have been told that the Ukrainians are attacking these states. So far, there has been no sanctions by the U.S. against Russia for doing this. And the president of Ukraine actually came out and was looking for some kind of peaceful resolution. And so far, the stock market was sharply lower, then it kind of came back and actually was higher a little bit. And the grains are kind of giving up, especially soybeans, soybean meal, and corn, some of its early gains. Soybean oil is still sharply higher with Dalian soybean oil, palm oil futures sharply higher, and Malaysian palm oil are making new all-time highs for the third straight day. As far as South America is concerned, I'm still looking at a Brazil soybean crop at 124 million tons versus USDA's 134. We're also looking at possibly an Argentina crop of 39 versus USDA's 45. As far as corn is concerned, I think a lot of estimates are still waiting for Brazil's second crop. Right now, the estimates are pretty close to 112 million tons for Brazil's corn versus USDA's 114. But in Argentina, there may be some irreversible damage, with some people calling for the Argentina corn crop at 49 million tons versus USDA's 54. We also have 16 million tons or 700 million bushels of corn that's still yet to be shipped out of Ukraine. And we just don't know if there's going to be any disruption to that. I think for the most part, the market still looks for higher corn prices and bean prices and wheat prices despite the lofty levels already. In the corn, March through June, U.S. demand for corn could be record high. For the beans, we're still looking to see if any demand out of South America shift the U.S. And so far, China's been a slow buyer of old crop U.S. soybeans. So some of that could be negative crush margins, negative feed margins, but still I think the Chinese are short and need to buy beans. And I think that's supportive to the marketplace. As far as wheat is concerned, again, you have dryness in the northwest part of Africa, southwest Europe, and also dryness in the southern plains. And I think eventually that's going to be positive. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.